Hi, everybody. Welcome back to another edition of VCTV. I'm Kyle Acott, your host, and we have an exciting episode for you today on Friday. We are going to be talking about two of my favorite subjects and that of all of our extremely brilliant and phenomenal guests who are joining me today, and that is fintech and blockchain. We have talked about a number of subjects here on VCTV, everything from gaming to immersive realities, AR, VR, to education, to deep technologies and looking beyond the stars. We've talked about it all the way even to machine learning and data leading up to today. What does all of that mean? Where does all of that technology play a role in our lives? But most importantly, what does the impact of fintech, blockchain have on our lives, both in the sense of our daily lives and within the enterprise, and maybe somewhere in between? We're going to talk all about that today. So much to unpack. And if you're not top of mind of where everything is in this industry, let me give you some rundowns, as I like to do on this type of show when we talk about these subjects today. First and foremost, decentralized finance, DeFi. As of right now, just at the top of the hour, we've got $5.4 billion and growing locked away in total value. That's five times more than what was locked away on June 15th. Okay, do the math. We're not even at August 15th yet. We're still 24 hours away. A lot has happened in this space. Alex is already smiling, so I know he's getting ready to comment on that. We've got 1 million in South Korea that have opted to go and take their entire driver's license digital, all on the blockchain. We've got activity throughout China, throughout Southeast Asia, all over the place. China is expanding the use of their digital currency and testing of the digital yuan throughout the greater Bay Area. That's Hong Kong, Shenzhen, Guangzhou, Macau, and many other regions as well. Mercedes, MasterCard, Alibaba, Kona, Coca-Cola, their bottling company, Coke One North America, all making huge efforts within the enterprise on a public facing within the blockchain. Non-fungible tokens, NFTs. William Shatner, we saw what you did. You didn't just go to the stars and beyond. You made some non-fungible tokens. You put them on the blockchain. He's not the first. He's not the last. We're seeing this as a huge movement throughout the blockchain landscape. Doctor Who, we're watching you. Doctor Who just released a trading card game, or just announced it, so we'll be seeing that. Electric Capital dropped a huge venture fund, hundreds of millions of dollars. We've got a handful of big announcements that have come out in the funding landscape. 6 already this month, as we're only halfway through. We saw 15 and growing last month, as a few snuck out without letting us all know. So much is happening in this space. And if you're not believing that, look up YAMS. YAM. Look up YAMS. I knew you all knew I was going to bring this up. We might be yamming today. If you don't know what that means, again, go on Twitter, look up YAM. YAM. This is a project that within 24 hours, less than actually, within 24 hours, saw $500 million. $500 million locked away in total value within a DeFi project. A huge, huge thing. And then all of a sudden, just like a turkey dinner on Thanksgiving, the yams were gone. Or were they? We're going to see. We're going to find out. We're going to dive into all of this and so much more. We've got an amazing panel for you, again, as we always do here on VCTV. Thank you to our audience for tuning in. Those that are listening, we'd love to have you on the show. As investors, you'd like to talk, share your insights about what's happening in the world, whether it's locally or around a specific industry or technology, reach out to Elena, to LA Token, or to myself, and we would love to hear from you. Entrepreneurs, guess what? This is not just a show for investors. You have the chance to jump on too. We'd love to have you on here to pitch us your company along with our entire audience as well. So do reach out. We'd love to hear from you and also have you on the show. If you like what you hear at any point, click subscribe, give us a thumbs up. I'm Kyle Acott, your host. Let's dive in. Big shout out to Elena and to the entire LA Token team before we get started for always making VCTV possible every single day on your screen, your device, anywhere you may be in the world. Now, without further ado, let's start welcoming our guests. Alan, welcome to the show. Very first time here with Elena and I on VCTV. If you can, a little introduction, a little background on yourself.
Yeah, thanks for having me, Kyle. I'm Alon Gorin. I'm one of the founders of Draper Gorin Holm. We do early stage blockchain investing. I've been in the space for a long time. Previously was in financial technology as well. And happy to be here. We also do Los Angeles Blockchain Summit every year, formerly known as CIS. So happy to be on the show. Happy to contribute. Thanks for having me.
Absolutely. And just a quick follow-up. You guys have been investing in a number of projects within the space. Can you talk a little bit more about what you're seeing or what you're interested in on that side? And then we'll continue around.
Yeah, I see it as sort of two ends of the spectrum, right? Like we talk about this with our partners a lot and our investors. There is the DeFi side where, I think it's at heart and like internally sort of what gravitated us all to this space, right? Like completely circumventing the regulation that we might feel is unfair or unjust or un-American or just, not efficient. And then there is the side of security tokens and things like that, where we think technology could take the current marketplace that's very, very old, that's very, very manual, and streamline the process. So whether you agree or not with regulation, we could automate the regulation. We could create blockchains that enforce the regulation. We can do whatever we need to do so that the pain of dealing with the regulation isn't on the companies, isn't on the consumer. And so, we're investing in, across that broad spectrum of companies participating in the space. So we have some DeFi companies that we participated with and invested in. We have some companies that focus on the digital security side of things, and then all of the sort of service providers and other types of products in between, or that could be built on top of those layers, are people we're interested in investing in.
Awesome. Wonderful. Welcome to the show. We're excited to dive into that a little deeper. Emmanuel, welcome back as well. It's been a pleasure. Haven't seen you in maybe 24, 48 hours. Welcome.
Yeah, thank you, Kyle. So my quick background is that I am an investor, more kind of private equity style, control type investing. However, I do a lot of angel investing and have kind of been in and out of Silicon Valley. In fact, Electric Capital, you mentioned, my classmate's a founder. So I've kind of been following their story closely. Personally, two relevant investments. One is company called Passfolio, which did an ICO a number of years ago, and they've sort of made it easier so that anyone in the world could buy U.S. stocks, and kind of any stocks, quite frankly, but U.S. stocks in particular. And you can buy and sell cryptocurrency. So sort of like a Robinhood type application, but kind of global so that's the one. And then the other is less blockchain, but more fintech infrastructure, which is probably where I'm more knowledgeable about. A company called Phoenix Payments, which is essentially helping companies that maybe are customers of other folks like Stripe or some of the other kind of payments processing technology out there. Phoenix essentially helps you kind of take that payments processing in-house and allows you to monetize part of that payment stack so that you could take more revenue home and facilitate payments. So that's my background.
Awesome. Alex, for the few people in the world who may not know who you are, a little intro and a little background. Great to see you.
Sure. I'm a founder of Celsius Network. We provide loans and interest income accounts. So we now have about 35 different coins, about 1.2 billion in total assets on deposits, provided by about 150,000 users from all over the world. And we've paid more interest than anybody else to date, including all the DeFi guys, to more people from more countries. Any way you want to count it, we're still ahead of the game.
Absolutely. And I can contest that. Noble, welcome back, my friend. From the stars back to join us here on Earth. Appreciate it. You're on mute right now, but
I'm off mute now. Yeah, it's awesome seeing Alex and Alon both. I've been acquainted with Alon for quite some time. I've been tracking all events, so it's good seeing everybody on here today. I'm with Dracone Capital Partners. We work with a lot of pre-seed seed companies across the spectrum in both gaming as well as DLT and Fintech. We also work with M Accelerator. I'm an advisor on maccelerator.la. We kind of have a mandate to invest in about 300 startups over the next 3 years. And, I love the space. I've been tracking it, being a being a broker and a hedge fund operator for almost 25 years. I've watched the space kind of evolve and grow from the first time I bought Bitcoin back in 2012, 2013. So it's exciting to be here. And, where we look now is a lot of the pre-seed and seed, a lot more along the gaming side as well as the DLT. So the Solitaire Shatner card, it was funny that you brought that up. That's something that we're talking about in-house right now.
I mean, it was pretty amazing. The card itself, a few cards. I'm curious to see what's going to happen with Doctor Who, but more on that in a little bit. William, welcome back. I know it's late on your side, but a pleasure always to have you join us.
Hi, I'm William from Engineers House, based in Kuala Lumpur. Okay, have some good news to share today. I'm not really into deep fintech and blockchain, but one of my company who is in fintech just closed its first round of credit card funding, and we raised $500,000 US. Just closed yesterday. Okay, so now my responsibility is to actually prepare them for OTC quotation. Okay, to raise 3 to 5 million US. Okay, so that's my new KPI for the company, right? So yep, and one of my company where I'm an advisor actually filed a registration D in the US. Okay, before COVID, with the intention to raise 5 million US in the US market, right? So that's another company I'm involved in, right? So yeah, that's it.
Right on. All right. Well, last but not least, the one and only happy Friday, my good friend and second co-host, Gary Fowler. A little intro, a little background.
Yeah. Okay. I was waiting for it, Kyle. I was waiting for it.
Show's not over yet, my friend. Show's
exactly.
not over yet.
Well,
We got time.
I appreciate it. Thank you. So anyhow, my name's Gary Fowler, and I am the CEO and co-founder of Get Shit Done Venture Studios. And our job is to take incredible companies that are growth stage, primarily AI companies across multiple verticals, fintech, manufacturing, it doesn't really matter, and really curate those companies. And we're looking for unicorns. We've done unicorns. I was on the original management team of Click Software, which was sold for a little over $1 billion in August of last year. And I'm also the co-founder of Viva.ai, which is a unicorn, close to unicorn status. That is a company I've co-founded with David Yang, a billionaire from Russia. And it's in Silicon Valley. We're working on remote workforce management. So love technology. I love where AI can be applied. Love blockchain and of course the security that it offers. I really appreciate being here today. It's good to see a lot of my friends that I've seen. I feel like we got a group now. But it's great to see everybody. Thanks.
It is fun, and it's a pleasure to have each and every one of you here. This is not just an exciting topic to talk about here on VCTV, but it's exciting to talk about it with each and every one of you, as you are all experts in this space or relevant spaces as well. To Gary's point, we do have a quorum or a group, so we do have a lot to talk about. And I think really the easiest question, the first to kind of put out there is the headlines I dropped, is really what's happening. What is going on right now when it comes to fintech and blockchain? I threw some fun headlines out there of what's been happening in the decentralized finance space, in particular around blockchain. But there is so much. There's a lot happening behind the scenes. There's a lot improving at the infrastructure level. We're starting to see what may or may not become of Ethereum 2.0. We're starting to see more protocols being introduced from a scaling aspect that's actually starting to take place. There are things happening, and this is being applied in many different areas. Now, on the fintech side, what we have traditionally referred to as fintech has really stepped up its game, as we're seeing more of a use around contactless payments. We're starting to see more automation. We're starting to see more digitization, which is wild to say, as we would assume fintech was taking us digital, but we've seen where areas where that wasn't possible. And we're starting to see the rise of neobanks and additional banking platforms to help bring people into a more digitized or open banking type world. So to each and every one of you, I would love to come around and get your thoughts as to where we are, and then we'll dive deeper into things from there. Alan, you're the latest, the newest, and this is your first time on the show, so you get to kick us off.
Nice.
What's going on? What's happening? What are you seeing as the current state?
I think it's both. We're seeing the double-edged sword of innovation at the moment. Like, I've been diving into the DeFi stuff very, very hardcore lately. Since COVID. I used one of our portfolio companies to create a WordPress plugin that allows anyone to create a decentralized exchange on their website. And that was sort of me tinkering around the space, because I feel like I'm not going to be as best an investor as I could possibly be if I don't participate. So with all of this latest craziness, I bought some yams. I participated in the vote. I was up till 1 a.m. last night, putting staking my curve pool and earning some curve tokens on this ridiculous stuff that's going on. And I think that what it's showing is that there is definitely crazy, amazing innovation happening in DeFi. It's absolutely taking the things that bankers take for granted and making it accessible to the common people. Do I think that every single one of us and our friends from high school and our parents and brothers and sisters should be getting a MetaMask wallet and participating? Absolutely not. They should be using intermediaries who will make it more user-friendly and accessible. So they should be using things like Celsius, because when shit hits the fan, they have a company they can call, they have a help desk they could reach out to, they can understand when there's a flash crash that may or may not be manipulation by people in the industry. Regardless of what it is, they have a customer service person they could talk to, they could reach out to, and that's I think where all of this is going. I think that there's two things that will happen. Either the banks will be more transparent and will be more fair with, maybe take a smaller percentage of the profits and give consumers better rates, or they're going to die, and other folks who are creating better products for the consumers are going to scoop them all up. Because we live in an age where everything is less sticky than it ever was. We're all banking from our phones. We're all doing this stuff online, and when one group takes advantage, they no longer have the handcuffs on the consumer. So more as time goes by, I think that's where this is going. Like the fees are crazy, everything is crazy, and all of those things are one proof that this is super valuable to consumers, but also proof that there needs to be a more user-focused layer on top of it. Right. So it's an exciting time, and I'm purposely staying at the high level without trying to dive too far into any one of these news stories, but we can as we go dive in if you'd like. I can give more details.
Yeah, I want you to dive in. So I'll keep going around, but prepare. We're diving in. We're not talking just high levels. I mean, there's too much stuff happening in these industries to not dive in on that. And you're bringing up some good points around mobile activity and how much people are digitized without even thinking of it. We talked about this on an earlier show in the week that we keep talking and referencing over the past 6 months of the digitization of everything, how we're living, or we're going to be living these digital lives. But in all reality, almost everything we do is digital. We're connected to a screen almost every hour except when we're sleeping, and so we're kind of more in that digital world than we think we are. So with that, Alex, to you. I mean, Alan name dropped Celsius a few times, and respectfully, as he should. But what do you see happening? What is happening in this world? Where is the current state of everything?
Well, look, banking is 700 years old, right? And what banks are doing exceptionally well is extract value from the depositors and give it to their shareholders, right? I mean, every quarter, JP Morgan pays a dividend to their shareholders. Where did they make all that money from, right? It all came from the depositors and using the money that the depositors give to create more money. So DeFi is basically saying, first fintech for 30 years tried to kind of crack the code and do the same thing, but because fintech is running on the same rails as DeFi, as the banking system, there was basically no progress. We've made zero progress with, if you look at PayPal or Venmo, whatever, yeah, great. It's a little bit better, a little bit faster, but there's no value created there, right? So comes the blockchain, comes DeFi, and suddenly you can do things that you couldn't do for all this time. So all this value that is being created can suddenly be delivered to the depositor and not to the shareholder. So what CeFi or DeFi is doing very, very well is basically showing how easy that is. And obviously there are platforms that are stable and that do this well and you can sleep at night. And there are platforms that were just, again, Yum was launched just a few days ago. And for people to think that the code will just be perfectly bug-free, considering it's one guy who did it in his basement overnight, is just lunacy, right? So the fact that hundreds of millions of dollars flew into it just tell you what kind of mania we're living through, and usually that is kind of like in my meter of, are we at the top of the bubble? Yeah, we are. I mean, we're like hitting the max part of it, like every second, exactly. So I mean, at Celsius, we're focused on delivering utility for 7 billion people, not about, okay, let's shower. It's like a musical chair game where we're going to play the music. We're going to shower, comp or Yum or whatever on people. And when the music stops, whoever got caught in that part of the game loses all their money, So these are things that are just not going to last, right? And all we're going to do is burn through early adopters that instead of bringing mass adoption, we're just going to create a little bit of a fun game and, and nothing is going to come out of it. So what at stake is the financial freedom of 7.5 billion people, because no bank is going to change their color or come and join DeFi. I don't believe in any of that, right? So yes, the opportunity, is, like Alon said, is to create and deliver utility to all these people. But we need to, all of us need to be, responsible citizens and build something for the long term instead of like trying to scoop as many tokens as we can, cash them out, and you don't care about the people that came right after you and crashed or lost everything. So I'll pause here and let other people contribute as well.
Yeah, I think that's 2 for 2 in terms of building something that matters and has an actual interface on top of it, right? Something that's usable in some way, shape, or form. So let's continue and see if we have a full quorum to Gary's point on that one. If we have reached consensus on it, I'm having a little fun. It's Friday. Emmanuel, your thoughts? What's kind of the current state of things? What's happening in the world?
Sure. So I'll maybe take a step back because I'm probably a more conservative investor than most here. But I think what Alon mentioned about a user-focused layer, super important, or else people like me are not going to understand it. But there's look, I've invested in it, but I don't tell any of my friends who are like, how should I do it? I'm like, don't. Not yet, right? And to Alex's point, like, are we in a bubble? I'm not the guy that says we're in a bubble, but I'm also the guy that says like you should invest in things you understand, right? And that goes for like just plain any stock, right? Like, and quite frankly, if you follow Warren Buffett, whether you like him or not, right? He's not necessarily a believer in this world as much yet. He's buying companies he understands, McDonald's, Coca-Cola. But anyway, taking maybe what Alex was mentioning about how folks are still building on the kind of existing kind of infrastructure, existing rails. There's still so much innovation that could still happen there. And so maybe if you're not ready to take the leap, into the blockchain world, there's still, I mean, you look at just one transaction and how many entities touch it today, to think about all the different innovation that could happen still in the infrastructures fintech. Whether on the merchant side or the buyer side, right? You have the banks. We have banks on both sides that touch a transaction and take a fee. You have the credit card issuers, the card networks, the MasterCards and Visas and Discovers of the world that take their fees. Right? You have then a processor that's on one end, and then you have a processor that's on the other side too, right? So you have like 6 different layers of companies that are taking a cut of every transaction that's happening in the world. And it's, when you think about the kind of how big this market is, right, you're talking in the trillions. So it's not because it's like one transaction. You can, if I buy something, that person that has money could buy something else, right? So there's a massive multiplier effect. So this industry is massive. There's still very old school ways that JP Morgans of the world are clipping coupons on this type of stuff, especially the Visas and MasterCards out there. So there's massive innovation that is still happening. All the VCs, whether they were fintech investors in the past or not, now they are, because everyone's like trying to figure out, what do I do in fintech? Because you can play it on the consumer end, you can play it on the enterprise end. And so there's a lot of folks kind of searching for answers. And I think maybe first movers like Alon and Alex, because I've learned a little bit more of your backgrounds, like you guys are going to, folks like that are going to reap the benefits, as long as you don't, maybe you shouldn't be buying yam, right away on the first day. But those are the folks that are going to benefit, because they're going to understand the infrastructure, going to understand the applications when the user focus layer does get created. So I'll get off my soapbox there and let the conversation keep going.
It's great points, Noble. Oh, you're on mute.
Yeah, technical difficulties this morning. I look at YAM, and I have a degree in finance, and so I've always been traditional finance, and I got my license when I was 19. So I look at something like YAM, and I always think of the tulip scenario, in which people are constantly chasing after the next big thing, looking for huge windfalls, particularly in the space. And I think a lot of the focus is too much fixated on this idea of the replacement of cash, and less on really the ability to do the DLT, the distributed ledger technology, on the scale of being able to track and integrate and create assets that are exchangeable and movable, as well as track the way things move and are done. I mean, it's, being a programmer for years, I always look at GIGO, right? Garbage in, garbage out. And I look at a lot of this as, the idea of the blockchain is brilliant, and it's conceptually very, very interesting. And there's a lot of wealth being created. But unless you're doing things like the way Alex is doing it, and some other players in the industry really taking advantage of what DLT can do beyond the money game that people are playing, then you're at a loss. And it also drives the second thought I always have too, is that this is just such a glaring view of how the digital haves and digital have-nots are starting to separate bit by bit. Emmanuel hit it best. If you're already in the space and you're familiar, you're going to make the moves necessary to collect the tokens here and there along the way, whether it's Ripple, whether it's YAM, whether it's the next push. But those people who are out of the loop are going to be late to the party. And it still disturbs me, without getting overly philosophical, but that 50% of the world doesn't even have running water. And we kind of, fixate on these, the way the blockchain is changing things in the Western world, when the biggest benefit was what I've always seen is really the developing world, in which they're finally now being able to bank. There's a whole huge underbanked and non-banked community that needs to create some stability. And, I love when we have projects that allow those people to be able to have something to hang their hat on, so they can buy goods throughout Africa or Southeast Asia or the like. So it's just one of those things where it's fun to talk about, but it's also, we have to be cognizant that we're at the 1% of the 1% in these level of conversations, because most people just can't even comprehend what the next 25 years are going to look like. And we're already at that bleeding edge of it, and it's exploding. So there's going to be a lot of people who miss out, and there's going to be a interesting wealth redistribution that occurs along lines. It's already started with people who accumulated Bitcoin for next to nothing. I saw Alex's post on LinkedIn. when he was offered in 2011 to buy Bitcoin. And, I remember people bringing it up to me. And then I remember my first Bitcoin transaction. It was like doing some kind of weird back alley transaction, reaching out online, trying to find the guy. And then, how do the secret keys work and all that. So this whole thing is a long way. I mean, it's like almost 5 years plus away from a regular person being able to manage and even integrate with this in any format. But there's money being made, and unfortunately it was supposed to be decentralized, but the centralization is still happening because major banks are now starting to migrate over. So it's an interesting space that we're talking about.
Listen, people will be posting this video like 10 years from now saying, gosh, look, they were talking about DeFi and we had no clue what they were talking about, so every generation looks back and we all look like mavericks, but we're talking about 10 years ago and we were the idiots who didn't know what to do with Bitcoin back in 2010.
That is very true. And I resonate with both of you on that. And the first conversation I had around Bitcoin was in Hollywood on the Star Walk, which totally goes to Noble's point, and then to Alex's of like, okay, this we looked crazy back then. Now we look like we were geniuses. So
nothing legit happens on that street in Hollywood.
I'm leaving that up to the audience. It's a special magical place. William, to you, what are you seeing kind of in the world? I mean, you just had a successful fundraise. Congratulations on that. But what are you seeing in terms of the world being in Asia as well? That's happening around fintech and potentially blockchain as well.
I can't comment too much of the technical part because till now, not 10 years ago, but now I still don't really understand how it works. Okay. But I know that I have to be in it because whether you like it or not, you'll be here to stay. Okay, so in Malaysia or in Asia, all the governments or the authorities of financial service are all very, very cautious about it. So technically in Malaysia now, you're not allowed to do any form of cryptocurrency. You're allowed to buy and sell, but you're not allowed to issue yet, right? So just this morning, my Australian partner and I were discussing about STO in Australia. He just started the process in Australia. So Australia has started that. Okay, so he's in a mid way to do that. And if you look at, I almost did the initial token offering back in 2018. So when we start planning, Bitcoin is at the roof. Okay, shot up the rocket. And as we are about to launch, okay, we are 2 months from ready to launch. Then we started to notice Bitcoin is under pressure already. And 1 month before we launched, it basically collapsed to 4,000 at the time. Okay, so we actually call off our ITO, all right? So, and for the last 12 months, in Asia, for example, a lot of countries are not actually allowing it, but yet all the banks are actually, in a way, is testing it. A lot of sandboxes, like our central bank, they allowed a lot of fintech companies to test on several platforms. Okay, and one of my the company I mentioned just now, my partner is involved in the exchange. Okay, so the authorities are still very, very cautious, but they are not writing it off. They are allowing companies to test already. They want to engage with the players in the market, right? And from my perspective, I know this is going to happen soon. So I try as much to understand. Okay, so for the fintech that we just did the $500,000 fundraise, what they want to create is a robo-advisory for the masses. All right, so people who don't understand how to invest in stock, crypto, or what, so what they do is they'll create a robo, okay, to actually analyze depending on what sector or what risk factor or preference the user like, and we will actually create up to 300,000 different sets of option for investors to choose from, and this will go mass for the mass market. And the reason why we want to go to the US market is because investors in the US are more open to it. Okay, so we decided to go on that route. So probably in 6 months to 12 months time, we want to be on OTC, and of course, in 2 years time, we want to be on NASDAQ.
Love it. I love it. I love the enthusiasm. Gary, to you, what are you seeing as kind of the current state of things? And we've been talking a lot about blockchain and integrating into other areas of technology and industries over the past week. But outside of that, what else are you seeing as kind of the current state of things?
Yeah, I just have to say I was involved in, I don't know, maybe the largest cryptocurrency network. I'm not even going to say what it was, but we the one that didn't come through recently over the last year, close to $2 billion. So I was actually involved in that, and the money came back. So I don't know in terms of, so in the crypto side, I think there are too many questions. I know we went through that for a couple of years. What I see on the other side, Kyle, is I see things like robotic and fintech, robotic process automation, to be able to go down through and look at areas like compliance. Let me think about it. Let's keep it simple, stupid, right? The banks today, you go to a bank, they don't even let you go in, right? I don't know what it's like in California today, but here in Florida, they got drive-ins. You can't even go inside the bank. We need to do more hyper-personalization. They've got the data. They've got access to the data. Everybody should have a private banking experience. And we've got to tie those, on one side, let's take Truist, for instance. They have LightStream. To be able to tie all these different, from obtaining a loan to getting the credit card, to be able to instantly get my account information. And oh, by the way, I may not want to go down through and go online, or may not have access. I want a conversational interface. So, and we don't have that today. And I believe, I see it happening with the banks. That's getting better and better. And we also got to forecast where somebody's going to be financially, right? The banks look at, for private banking, not only where you are today, but where you're going to be able to assign those representatives to you. So I think that's really important. I think that we're in a stage with COVID and this digital transformation. I want to say one other thing, security. It comes up time after time. We've got to make sure we're consistent using artificial intelligence to be able to predict where the bad guys are going to be, or gals. So we need to do a better job of that, and we've got to be more vigilant about it. I think we're in a dawn of a new era. And because of COVID, because of the digital transformation, the idea of going in and shaking hands with your banker, at least for the next 6 months to a year, is not going to happen. Just not going to happen most of the US anyhow. So we've got to figure out how we can get closer to that customer faster, and also how we can make the systems more efficient. And it's getting better. I went to Truist recently for a loan for my sports car, just to get some credit. And they did it in, I don't know, 5 minutes, something like that, to get it set up for me. I like that kind of service. We got to be more efficient with the systems. And I believe with AI and again, the digital transformation, that we're going to do it a lot faster than we ever forecasted before. So hyper-personalization, robotic process automation, right? And for me, conversational interfaces are 3 key areas I'm really interested in investing in.
I love it. I actually right on point with you. And guys, I want to get away from the headlines now and kind of dive a little deeper to Alan's point. It's great to make a headline that you're using blockchain technology. And Alan and Alex, this is for you guys first. But are you really using it? And what is needed to make this technology really enter in terms of mass adoption? And there's 2 sides to that coin. I feel like you're each going to answer where I'm looking to. So there's the consumer facing side of mass adoption, and then there's the enterprise or the infrastructure side of adoption. And I would love to hear both of your points is what is needed to get towards that adoption. Because Alan, you're right. You can't just go download MetaMask, the average person, sign up and use it and know what they're doing intuitively. Fairly, there's still a complexity to there. So for you first, and then Alex, I'm coming to you. What is needed to make mass adoption happen on both the consumer and the infrastructure side?
I think that there's it's sort of a 2-step process. The products are there in a sense, right? So like this idea of yield farming and the craziness and hype around that is a bit ridiculous to think that it's sustainable to have 100% returns and crazy things like that on an everyday basis, and it's a roller coaster and all of this craziness, right? But the idea that the people who put their money into a system get ownership of that system is not crazy. It's actually the way community banks and things like that were originally supposed to be. So the products are there, right? The problem is the instability. So I think that the first step in making it consumer friendly is creating stable products. Like one of our portfolio companies, one of the reasons why I love them is because they take the best part of DeFi and they utilize them. It's called DeFi Money Market, DMM, but they created a way to get a stable return on real world assets. So
Alan, we're going to come back to you. You may have frozen. You may have said the wrong word and someone froze you. But nonetheless, Alex, to you, same question. I mean, when it comes to Celsius, you guys have done a great job. I'll plug you for that in terms of adoption, in my opinion. But outside of Celsius, and you definitely use it as a reference, but outside of that, what else is needed to make adoption both at the consumer and the infrastructure level as well?
Well, one of the biggest problems today is how hard it is to join this community. Like, even if you want to do it, you have to be a computer geek. You have to know what you're doing. You make one mistake and you lost your keys or you lost your money. So we haven't really solved the user interface issue or help people recover if they make a mistake, be able to recover the situation. And that's why when we created Celsius back in 2017, we said, okay, we can't bridge that gap with just better DeFi technology or better, blockchain. We have to basically have one leg in centralization, one leg in decentralization, and manage that experience as you onboard, as you bring all the money from the centralized world, right, into the crypto world. So I think we're still, everybody, right? The exchanges and service providers are still working on making it better. I think today Coinbase is considered like the gold standard, but it's still, even Coinbase is very difficult for most people, right? And in our industry, look, we're all men on this channel. Crypto is 90% men, right? So we have completely excluded more than half of the population in the world. So by not making it simple, by not making it intuitive or inviting for female to join this revolution. So I think that's kind of one side of it. The corporate side is really, I view it as like 3-horse race. Mentioned this before. So you basically have the open DeFi or open crypto, which is what we're all believers in. But then you have the corporate version. So for example, we just saw obviously Libra, and we're seeing JP Morgan just made an investment in who did they invest in again? Joe Lubin, right?
Consensus.
Yeah,
they just dropped news. Yeah, Consensus.
Right. So these are bets that corporate semi-centralized blockchains are going to be the winning version, which is kind of reminds me of the intranet, the internet versus the intranet, and how IBM was trying to sell you an intranet. And then you have a third version, which is the government version, right? So the Chinese government, the US government are going to create blockchain-based fiat currencies, and really no one knows which one of these 3 horses is going to win. The party that's going to win is the one that gets the most users. So it's not really necessarily the best technology or the best brand or whatever. It's going to be who brought in the most users and created the mass adoption. China, by definition, has the most users, right? Being the largest populous country in the world. So they have an early start. And if they basically steal the thunder from all of us and create a centralized, government-controlled blockchain where every transaction is monitored, and that will be a disaster for the rest of the world. So it's ours to lose, but we also the clock is ticking, And we really need to solve a lot of issues to bring in people, not just because they want to play with yums, but actually because they want to build their financial future.
I think you're absolutely spot on. We're already seeing those waves happen, right? The more headlines, but really the more
wanted to say
activity.
all these things, but I cut him off and I jumped in and stole his thunder. So
Perfect.
You did a great job. I mean,
would-
look, everyone's unmuting, enjoying every bit of this. I mean, I think you did a great job. It's like you wrote this script together. The two of you pre-show. It's like you guys knew what you each were gonna say. Alan, you're back.
I was doing the thing that I think we've all now done tons of times, but in COVID, I feel like it's happening more and more. I was talking to myself for 5 minutes, just on a roll, super stoked on what I was saying, and then realized hey, the other guys aren't even moving, not even a tiny bit. Wait a second, my internet had cut out. It was pretty great. Which is not much different from being in the crypto space anyway. I start talking and everyone tunes out. It's just, I'm stoked on what I'm saying, but nobody really gets it or cares. So, but no, I couldn't agree with Alex more at all. I think that on the consumer adoption front, the first half of your question, the real issue is not that the products don't exist. It's sort of the stability and the access. Like I was saying, I think the average consumer product cannot be built on such a roller coaster. It just can't. And so these products that are going to create stable yield and stable and interfaces for people to build consumer products on will be these protocols that are adopted. And those protocols will be adopted by the consumer through an intermediary, through a neobank, through another product. And I think that's how it's going to happen. And these things like transaction fees and things like that won't really matter to those people. We're building a product right now. It's going to run a batch transaction once a day. If a fee costing 50 cents or costing $20 would make or break that company, it's not a company that should exist for consumers anyway. That said, there's huge inefficiencies in this blockchain right now, and it needs to be fixed. And maybe other blockchains will fix it. Maybe it'll fix itself. But anyway, the instability is the biggest issue in my opinion. All of these novel concepts, all of these ideas, I don't think of them as that novel at all anyway. I just think of them as creating automated versions of the way that bankers are taking advantage of all of us already. And it's going to force the bankers to stop or lose customers. I hope at least,
Yeah, I think you're right, and again, both of you guys are hitting it in terms of stability, access, and then it's going to be about users. And to get users, you need to have stability, and you need to provide ease of access with a clear interface. So I think you're both on it. Gary, I'm coming down to you. Artificial intelligence, AI, the new electricity, your everything. There is a world of automation that plays in an exciting world of both fintech and blockchain. I'd love you to go a layer deeper. Where does AI play a role, and where can AI really be applied, maybe where it's not already being applied in these two areas? Kind of a curveball, I apologize, but I think it's a good question.
No problem. Well, I mean, the thing is, so we need to have smarter, faster contracts. So door number one. I mean, so if you look at, right now, my situation where we're having all these discussions, I'm talking about security, right? I'm really concerned about security literally across the board. So applying artificial intelligence, I wrote an article a couple of years ago with the former chief security officer at Apple about cybersecurity. And I think that, where we are in this domain, I'm really concerned about it. So applying AI in terms of the cybersecurity place, applying AI in terms of the contracts to make them smarter, faster, and more efficient. So I think the combination, it's going to happen. It's a natural progression. So I think that's another area. And of course, in everything that we're talking about, I mean, we've got applications AI literally across the board. So whether it's optimization, whether it's personalization, I mean, there's all kinds of different ways that it's being applied. I talked about hyper-personalization. I talked about uh, compliance issues, those kind of things. So it's really an envelope around it. And so I think that, where we are today with uh, artificial intelligence, with the blockchain, we're in a new era. I mean, I like the fact, as we're talking about it, as Alex has said, and Alon had said that, we move forward. I mean, you've got, was it JP Morgan moving forward? I know when we did this huge deal a few years ago, they got stopped. I'm glad that we're adopting it. I also have some concerns about it because, we're talking about, with the, the U.S. has got a fiat currency that doesn't really have any kind of backing other than, the confidence of the rest of the world. What happens with China when China gets set up as a dominant player? What happens to the value of the dollar, right? Of the currency? I mean, we got some serious issues that are beyond just about setting up the cryptocurrency. So AI is going to continue to play a role in terms of optimizing everything and making sure it's more secure. So as I said, there's, hyper personalization, cybersecurity, making contracts more efficient and effective. Absolutely. So, I mean, that's what I see. What I'm looking for right now, I'm not looking at cryptocurrency per se. I'm looking at how fintech can be made more efficient and easier to use, right? And more personal.
And I think that's, yeah. And I mean, to Alex and Alan's point, I don't think anyone's going to argue that. That's what's absolutely needed. And even Noble, I'm coming to you around NFTs. I mean, even the idea of digital assets and digital collectibles and all this exciting stuff around gaming. Gaming has been a very interesting gateway, positively and in some cases a little bit questionable. And questionable because we're introducing new things that, to Alan and Alex's point, are missing that interface. In some cases, but gaming has offered a very unique on-ramp, as we've seen, right? Gaming typically in the past has created some kind of in-game currency, which allows for that ease of understanding and adoption to digital currencies. But then we get into digital assets, digital collectibles, and NFTs, non-fungible tokens. And this world is starting to explode. So Noble, I mean, you have got a background and excitement around this. We joked about William Shatner and some others that are in this. What are you seeing as kind of this excitement building around NFTs and digital collectibles? Is this real? Is this hype? Are we in a bubble of just us on this panel? And Alan, I'm coming to you because I see you shaking your head as well. So where are we in all of this?
So there's a couple levels, right? CryptoKitties set the tone for this completely, in which people were acquiring these digital assets, these cats, and selling them for the equivalent of several $100,000 in Ethereum. So it's not as if this is brand new and what happened with William Shatner, but I think it also shows to use case, right? Multiple people are playing video games and mobile apps and esports. And right now, something like $7 billion is traded in skins and avatars. And so people have been trying to figure out a way for a while now, to monetize all this time and energy. And it was a matter of time for cryptocurrency to be just a integral part of it. And there's so many different formats. Shatner released on Wax. Engine is another format in which you're able to take your in-game assets and actually convert them into a cryptocurrency that you trade. And so it's a natural movement. And I think if anything, it's probably the best use case for blockchain in the sense of a currency, because now you're able to then take the skins, the avatars, the items that you're collecting and using, and actually be able to sell and move them amongst each other without having to worry about cash or PayPal or losing money across the board, just trying to even move the assets. And it also got gaming companies to develop in a different way. We're in the middle at WordPlay developing a whole entire game on unicorns that can transform based on some of the CryptoKitty algorithms, but we're doing a stopgap where we're not going to immediately make ours on blockchain. but allow people to then take the uniques and then convert them to blockchain once they're created, and then license those out for clothing, items, and toys, so that now they can make money even further off of these uniques that they developed in their in-game play. And so it just shows, because people spend all this time, the casual gamers spend all this time in the digital world. We've talked about it on the show. We talked about it before, that this digital footprint that we have has been fully, I'd almost say exacerbated by COVID-19. We already were going there, but now here we are. And I believe that the tokenization overall is going to be, you watch so much television, you'll receive tokens. And I think this is where the regular adoption starts to find its way. To Alex's point, and I love the way Alex thinks, futurist-wise. He said something that was really key. It doesn't matter if you're the best technology or if you're the greatest technology, if the adoption is on the worst technology or on someone else's technology. We see it time and time again. Automobile gas engine was not the best engine. We had electric engines back in before the turn of the century, 19th century. But the reality is gas went out because oil was able to found cheaper, and it created an industry. One of the current concerns that I have is the have and have not issue. Before this COVID thing hit, the government was already about to, instead of give people cash, they wanted to give them a token. It was actually written in the bill. These kind of magnanimous moves is what will drive the normalization. If any particular U.S. government says, here, we're going to give the people without CAT, who are already broke, essentially, tokens to utilize, then the adoption starts happening, whether or not it's a good token, whether or not it's a powerful token, whether or not everyone who has it is going to use it. And what my biggest concern, and I talked to one of the portfolio companies we're looking to invest in the other day, my biggest concern is that what happens is you create the people who have cash and the people who only live on token, and you start creating a class divide based on who has real money. And so governments being involved concerns me to a significant extent, because some people on the panel said it, they don't really understand it, but we know we're early. I think even worse, governments really don't understand it. And I think they're almost the worst to be involved, because their idea is to use DLT as a controlling mechanism, not as an opening mechanism, the way it was originally designed. So there's a lot of things we're on the cusp of, but in the gaming world, I think it's just a great way to turn time into dollars.
Holland.
I was just
I saw you
gonna
shaking your head, taking notes and everything.
I agree, and I'm a huge fan of NFTs and been playing with it. Actually, one of the things that have frustrated me the last few days about like gas fees on Ethereum and things like that was I was actually showing a friend of mine who's not in the space at all, but a childhood friend who's an artist. I was showing him how to create a collection of NFTs and to put his NFTs online and stuff like that. And the gas fees were going to make it cost a couple $100 for him to do it. And that really put a huge damper on it, because I was thinking about being a kid, trading comic books, trading baseball cards, trading Pogs, Magic cards, whatever the heck it was. Everyone has their version of it. And I could only imagine if it cost me 50 cents or $1 to trade a card with a friend each time we traded it, how often we would not do it, right? Like, you would sell a card for 50 cents, you were excited, right? So it seems it's obviously a different time and a different era, but it's exciting. But I've been seeing this trend, and it's one of the reasons that got me excited in crypto, as far back as, I don't remember what year it was now, but 2008, 2009, maybe 2010, I was working at MySpace, and there was a moment in time where casual games started to become a thing. There was a group at MySpace called Open Social, where you could actually play games across the different platforms. I think it was a Google initiative where you could play games from MySpace against people on Friendster and Bebo and on Google and wherever else people were. And the big sort of, not real, like, it was a vanity metric. It's not like it was that impressive from the standpoint of dollars. But what was interesting, there was this vanity metric that was released at the time, and from Farmville, and Farmville was played by people like my mom, right? And that year, Farmville sold more John Deere digital tractors than John Deere sold real tractors in real life. One is a $100,000 thing and one cost 99 cents. It's a totally different purchase, right? But people paid $1 each so that they could farm their farm, talk about yams, a little faster, right? And
if everyone else is unable to join, we'll.
Hey, Kyle.
Next time you have to do a co-host. That means
Hold on one second, William. Yeah, go ahead.
Yeah, I can't get into Zoom. Did something happen?
Yeah, we had a technical difficulty. You should be able to get back in now.
All right, I got it. I'll be back on.
Yeah. Okay.
Thanks.
Yeah. It happens, my friend. It happens. You know, Zoom is easy and silly complex. But my apologies for that. We're going to give everyone a minute or so, William. If it's just you and Gary, what I'll do is I'll wrap us up, and then we'll just kind of end here. It's my fault. My apologies. So no stress on that.